This is the first video in a series on how to pay zero in federal taxes. In this series, I'm going to share ways that you can reduce your federal taxes to try to come close to that magic number zero. Today, we're going to focus on the Saver's Credit. I'm not providing tax advice here. I'm just sharing information on what's available in the tax law. Please be sure to share this information with your tax advisor to make sure that this information is suitable for your situation. The Saver's Credit is also known as the Retirement Savings Contribution Credit. This credit is given to incentivize low to mid-income taxpayers to make retirement contributions. You can possibly receive a credit for 50%, 20%, or 10% of your contribution amount. The amount that you may contribute is based on your filing status and adjusted gross income. Please take a look at the table on your screen to see the 2023 AGI limits. When you file your taxes in 2025 for the 2024 tax year, the maximum income limits will be $76,500 for married filing jointly, $57,375 for head of household, and $38,250 for everyone else. Each year, the maximum income limits are adjusted for inflation, so you should check each year to see if you qualify to take the Saver's Credit. You can take the credit only for new contributions, so you cannot take the credit on rollovers. You can make your contributions to a typical retirement account, such as a traditional or Roth IRA, a 401k, a simple IRA, an ABLE account, a SAR SEP, a 501c 18D plan, a 403b, or a 457b plan. If you make a tax-deductible contribution or a before-tax contribution, your taxable income will be reduced and you can get a Saver's Credit on top of that. Please keep in mind, though, that if you make a distribution from your retirement plan or account, any contributions that you make that year may be reduced, so the credit you receive might be lower. Oh, and by the way, dependents and full-time students cannot take the credit. The Saver's Credit is a non-refundable credit worth up to $1,000. It's worth up to $2,000 if you're married filing jointly. So this means that the maximum retirement contribution that you can make in order to get the most credit is $2,000, but it's $4,000 if you're married filing jointly. If allowed, you may still contribute more to your retirement account, but you just won't be able to take a Saver's Credit for contributions made above the Saver's Credit maximum contribution limit. You probably already know that tax credits are better than deductions because credits decrease your taxes dollar for dollar. Having tax credits is a good way to decrease your tax bill and get you closer to paying zero in federal taxes. The Saver's Credit being non-refundable means that if you have any Saver's tax credit amount left over after your tax liability has been reduced to zero, you won't receive a tax refund for the amount left over. This won't affect the amount that you will receive for refundable tax amounts, though. You will still get a federal tax refund if you have too much taken out in federal tax withholding from your paycheck or if you have any refundable credits. Now let's go over an example of how the Saver's Credit might look. Let's say that you are single and had $24,000 in adjusted gross income before your retirement contribution, and you contributed $1,000 to a retirement account. Your AGI would be reduced further by the $1,000 contribution, bringing your AGI down to $23,000. You will receive a 20% Saver's Credit, so your Saver's Credit would be $200. If you were to contribute $3,000 to a retirement account instead, your AGI would be reduced to $21,000. Now you will receive a 50% credit, but only up to the maximum contribution limit. Since the maximum contribution limit is $2,000, your Saver's Credit would be $1,000. I know that you might think that there is no way that you can afford to make a retirement contribution in today's economy, but you can adjust your W-4 to have less taken out of your paycheck for federal taxes. This should help to reduce the impact of having a retirement contribution coming out. Basically, you could adjust your W-4 to add the Saver's Credit back to your paycheck throughout the year. The IRS has a calculator that you may use to help you determine how much you should have taken out of your wages for federal taxes. I will include a link in the description box to the calculator on the IRS website. After you go through the calculator, you can download a new W-4 to submit to your employer. Starting in 2027, the Saver's Tax Credit will become the Saver's Match. Instead of a federal tax credit, If you qualify, you can receive a match from the federal government for 50% of the retirement contribution that you make to your IRA or to the retirement plan on your job. The match will be up to $2,000. So this means that you can possibly receive a retirement contribution match from both your employer and the federal government. The contribution match will be deposited directly into your retirement account. Under the new Savers Match program, you won't be able to have adjusted gross income greater than $71,000 if you are married filing jointly, $53,250 if you file head of household, or $35,000 for anyone else. There will be phase-out limits, so the higher your income, the lower the match. Before I go, did you know that most taxpayers below a certain income level can file their federal income taxes for free? Please watch the video on the lower right of your screen if you want to find out how you can file for free. See you next time.